The T-line, the 8 exponential moving average, is very effective with candlestick analysis to show when the trend is continuing. As we saw today, the Dow traded higher. It's not a very decisive uptrend. Each day is kind of a doji type day, but it's still moving steadily, and it's telling us that there isn't a lot of exuberance coming into the market. It's just a slow, steady uptrend with the likelihood the Dow and the S&P are going to hit the 50-day moving average. The NASDAQ, on the other hand, went through the 50-day moving average yesterday and still traded higher. Maybe not decisively higher, but traded higher. This puts us in a position where we can see how they open after a doji. A lower open would probably indicate there's going to be some profit taking and that they're going to come back. And once they go through a resistance level, they usually come back to test it to see if it's going to act as support. However, the overall trend is still going to be an upward trend, making some of the strong candlestick patterns the ones to go after. We recommended RARE, ARAE today, based upon the J-hook pattern that's supported right here on the 50, telling us that if this is wave 1, wave 3 should bring us back up into this area. Essentially, candlestick signals, you're looking for buy signals in the oversold area. Candlestick patterns, usually the stochastics are already in the overbought area, but you can gauge how far your next price move is. Very simple rule. Wave 1 and wave 3 are usually the same magnitude. So using that logic, we can see that in VIPS, a J-hook pattern, using the T-line as support, has the prospects of breaking out with another move of the same magnitude, which tells us that this resistance level and this fry pan bottom breakout usually will provide a very strong move to the upside. When you add this analysis together with your patterns, your signals, and your bigger patterns, you put the probabilities of being in the right place at the right time, and not only the right place at the right time, but in a situation where the magnitude of the move is usually going to be much greater than just a uptrending stock in an uptrend. Recognizing the pattern setup and what happened before, this is what we call the classic pattern. Notice our fry pan bottom, strong price move. Pull back right to the T-line and supporting on the T-line and starting back up. The classic pattern is a fry pan bottom breakout, a pullback, and a J-hook pattern back to back. The prerequisite for a J-hook pattern is a strong price move, making the calculated next move the same magnitude as this move. That'll be it. We're going to be going over a lot of these patterns in tomorrow's free training on the website, candlestickforum.com. So if you haven't been there, come join us. It's free and you get a lot of insights. That'll be it. We'll see you in the chat rooms.